Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And this was a pretty insane week. Nvidia, the Qs, everything tanked, then recovered and then tanked. It's pretty wild. We're going to talk about why I am calling it right now. I think that we're going to go down to the 200 moving average. I think that we're going to have another hefty sell-off. It's not for the traditional reasons that everyone usually thinks. Oh boy,
Stinks and stinks.
You know, it's for one specific thing that some important guy said. All right. So, without further ado, I'm not going to spend a lot of time on this. We all lived it. So, this happened.
That's a big red candle with a lot of volume, too.
Insane. More importantly, is the gap up, right? So, we were here and then we opened here. So, we already had an insanely percentage increase down to the 100 moving average. Now, my claim here is that soon-ish, I think we're going to visit this 200 moving average. Where's my arrow? Why is it not there? There we go. 200 moving average. Okay. Now, obviously, I don't do Bitcoin. I'm incorrect for not doing Bitcoin. I'm fully willing to say that because it went up and I didn't do it, right? Just like I thought Tesla in 2018 horribly overvalued. I was incorrect. But for some reason, this seems to be like a leading indicator now because when you correlate these charts, it's actually kind of incredible. But yeah, Bitcoin is almost a leading indicator. As it goes up, the market goes up. And as it goes down, the market follows. So kind of interesting.
So much for digital gold. It now has become like the supreme risk asset almost. So it's like it's not kind of paradoxical movement with the market. It's like gonna, if anything, be more volatile and happen sooner with Bitcoin.
Yeah, it's weird, man. I don't really know what's going on with that.
Yeah.
Nvidia, same exact chart, essentially. So I'm not going to spend too much time on it. Now, you're going to see a bunch of headlines on Nvidia on how essentially they gained and lost $1 trillion or gained and lost $400 billion. It just depends on when they count the day, because if it's 24-hour period, it's different. This is like a 50-hour period or whatever. But essentially, you have your quarter three earnings the day before. Big gap up. Market opens. It's went up a pretty decent amount and then full tank back to where it was and continued.
Yeah.
So not
Lots
ideal.
Of support there.
Yeah, definitely a lot. Once again, it just depends on where you count it, but everyone's saying it was like a $1 trillion swing in 54 hours. Some are saying a $1 trillion swing in 24 hours. That's not correct, but it's a lot. Let's just go with it's a lot. Now, why? One, there's no big news headlines during that crash. All right? It was really just kind of a news black hole with a couple things. One thing is Nvidia's accounts receivables for the quarter grew to $33.4 billion there from $23 billion. But look at this. Basically, it's 4 customers.
Yeah.
So 22%.
Their names.
Yeah, it's pretty obvious. So they have a really big concentration issue because Google just developed a chip. If they start doing their own things or going somewhere else, this whole thing falls apart. It's a little bit terrifying. So are we about to tank? I'm going to tell you yes, but also not for the reasons.
Okay.
All right. Is this bad? Sure. You have more people dipping into your 401ks for hardship withdrawals. Is that historically bad? Yeah, it's not good. That's not why we're going to tank.
A little higher.
We've shown this a million times. I'm not even going to go into it. Is it good?
Burry tweeted it.
Yeah, Burry tweeted it.
Yeah.
Is it good? No, but that's not why we're going to tank. Car repossessions hitting incredibly high highs. Bad. Yeah. Not the reason. U.S. credit card accounts delinquent for 90 days or more. Look at this. We're surpassing this COVID era here. That's not good.
Pre-COVID, right?
Yeah. And now, or is that why we're going to tank? That's not why we're going to tank. We're going to tank because of this man right here.
Leather jacket. That's it.
He's a pretty cool dude, though. I do like him. He said this during an all-hands meeting. Business Insider quoted him. So He said, if we delivered a bad quarter, it's evidence that there's an AI bubble. If we delivered a great quarter, we are fueling the bubble. So he's talking about how they're in a no-win situation, which is pretty funny. It's a funny thing to say. But this is the problem down here. If we delivered a bad quarter, if we're off by just a hair, if it looked like a little bit creaky, the whole world would have fallen apart. And I think he is correct. If they missed earnings, everything tanks. Everything goes away. And the fact that we have positioned ourselves in a market that's completely reliant on one company having an astronomical projection of like sales just continuously that cannot continue, especially when 4 freaking customers are most of it. This is not a good situation. It's a house of cards. That's all this is. I think we're screwed. Full disclosure. This is why, this specific quote. I don't know what your thoughts on that.
I mean, yeah, that's an interesting take. I mean, I guess the things that I take from this are he feels the same as like the memes in the market have kind of taken. So that adds a degree of truth to it, right? That everything's kind of purchased on this. But is that like a degree of arrogance as well? And that reality, like, sure, like market valuations are largely based upon this right now, but the AI is still a relatively small but growing area of the overall economy. And, even if we have an absolute horrific crash, we're still going to come out of this like, okay. And AI is going to be
I agree.
Massive product on the other side of this.
I agree with that 100%. I'm talking short term, not long term.
Yeah.
I think that we will see the 200 moving average because, frankly, fundamentals revenue doesn't matter at all in the short term. It is pure emotion, and all that matters is one bad thing to occur and everything falls apart. Not long term, but short term, as we've seen, we've dropped pretty heftily in a matter of like 3 days, just from just people freaking out.
Short term, in terms of major economic issues, I don't know if you heard, but Chipotle was predicting negative same-store growth year over year. That's the real issue with the economy right now.
Okay, yeah, that's not. I should have put that in here. It's Chipotle's sales. That's a good one.
It's Chipotle, not Nvidia.
This is the 100 moving average. The blue is the 200 moving average. We hit it back. What is this? 2024 August, and then we had that whole, whole tariff incident here. I'll just leave that alone.
Wow.
But we have hit the 100 moving average. I do think that we will sink further. Maybe not necessarily right now, but within the next 6-ish months, I think it's a high probability. Additionally, the government shutdown happened. We didn't get the unemployment rate. By the way, September very quietly upticked to 4.4%. It's just there's so much news, no one cared. This will be the first time in 77 years that we do not get an individual monthly unemployment rate. What they're going to do, they're going to put most of the data, but not give it an individual monthly rate and just combine it with the next month. And for people saying, well, yeah, the government shut down, we've had other shutdowns. We had a shutdown in 2018 that was 5 days shorter. They still got it together and got it out. They just released it the next month, but with its own thing. So I think that means it's because it's really bad. For you guys still watching, I closed my Rigetti short. It was getting a little, I sold too early, but I mean, I can't be mad at 35%. That's pretty nice. So here is my buys and here is my sells. Additionally, I did not talk about this, but I also bought some puts on October 28th. And then where is this one? I sold that one for, what is that? Another 30%. And then the day before or 2 days before Nvidia's earnings, I did buy puts. Because I was like, I don't like this at all. It did work out very nicely. But it was a little bit scary for that market. That open there, I was like, crap.
That was just to shake you and the weak-handed individuals out of the market.
I have a rule, and it's never ever sell options within 2 hours of the open. So I literally had a timer, and I was like, all right, and then it was like, oh, cool, this worked out.
Honestly, the whole thing with this market volatility creates opportunities. So I like market volatility. I'm still at a point where, like, obviously I'm 20 years from retirement. So it's just put money in when you see opportunities emerge, but don't panic when you see a big red day. That's my mantra right now.
Give me some of your stocks that you absolutely will not sell if there's a crash. That's because that's important. That's what people will go for.
Google, Meta, Alibaba, still.
Same.
I'm trying to think what else I hold right now. Berkshire Hathaway, same thing. Apple, like, I mean, the companies that I hold, that I believe in all of them longer term. Sure, there can be some valuation issues on the shorter term basis, but those are all companies that I'm committed to. And then, of course, a majority of my net worth is in kind of ETFs and index funds, those sort of things. So, particularly a lot of small cap exposure, which is. It was nice in this week because I had a little blunting because it wasn't quite as dramatic as it was for like the major tech companies.
Yeah. I did. So same answers. I did trim AMD a little bit. Yeah, okay. It's too high. I like the company, but it shouldn't be that price.
Yeah.
All right, guys. Let us know what you think.
Catch the next one.